Hello everyone, welcome to the lecture number 4 of Audit Committee and Corporate Governance. So here is, I am your friend, your mentor, your coach for CA Final Advanced Auditing and Professional Ethics subject. So welcome to the lecture number 4 on Audit Committee and Corporate Governance. So in this lecture, we are going to start from where we have left in the previous lecture. I think by the time we were done with the previous lecture, we were already done with the concepts relating to subsidiary of listed entity. So basically it's a very important concept which we have already understood. If you are unlisted and if you are a material subsidiary of a which entity, listed entity, then what are the important provisions you have to do? The board of directors, independent director of the holding company has to be one of the board of director of this material unlisted subsidiary. So all those remaining points, all those each and everything what we have already discussed when it comes to the subsidiary of listed entity, right? So all these topics, I don't think so that there was any doubt relating to any topic relating to uh, unlisted material subsidiaries. So let us understand, or let us start with the next topic. What is the next topic we have to start today is known as statement of deviations. What is the name of the topic? The name of the topic is known as statement of deviations or variations, regulation number 32 and part C of schedule 2. Now listen to this very carefully. In the LODR regulations, so far what we have understood that if you are a listed entity, once you turn yourself into a which entity? Listed entity, then there are so many LODR regulations which you have to cover. So far what we have covered about the material subsidiary, we have covered about the what do you say, audit committee, we have covered about the board of director composition, remuneration, so many points relating to LODR regulations we have covered. So now in this lecture, what we are going to cover is the remaining all the topics which we are left with in audit committee and corporate governance, except one, which is the amendment, which is having a minimum weightage of 5 marks. And as you all know that this was an amendment which was applicable for the May 2020 examinations. But as we all know that due to the pandemic situation of COVID-19, the May 2020 examinations were cancelled. So that is why definitely 120% this amendment has to be asked in your November 2020 examinations, right? So without wasting the time, let us start with the new topic today. So what is the name of the topic, everyone? So read the name of the topic. It is a statement of deviations. It is known as statement of deviations and variations, regulation number 32, part 2 of schedule, part C of schedule 2. Basically, what we are going to understand as per the LODR regulations in this particular topic number 8. Here what happens, see, we have seen that listed companies basically at the regular intervals, what the listed company does, at the very regular intervals, they will keep on, issuing the share capital. Are you getting the point? Sometimes they issue the share capital via IPO. Sometimes they issue the share via FPO. Sometimes they go for the private placement of shares. So what happens, listed companies at the regular intervals are very much in need of the funds. So for the procurement of those funds, either they will go for IPO or they will go for FPO, or they for going for the rights issue, or they can go for any kind of instrument like private placement of shares also. But the idea behind this particular provision is the purpose for which you are raising the funds. The purpose for which you are raising the funds, are you actually utilizing the money for that purpose or not? So SEBI, while LODR regulations, wants to know that if you are a listed entity and if you have raised a lot of public money via IPO, via FPO, or via private placement of shares, or via right issue, any method, in any method you have raised the public issue money, then in that case, are you making the proper utilization of that money or not? Whatever the purposes, whatever the objectives you have told in the prospectus or the letter of offer for which you are raising the money, are you actually utilizing the money for those purposes or not? That is what the major concern. If there is any deviation from the budgeted purpose or from the actual purpose, what do you mean by budgeted purpose? Say for example, I issued a prospectus. I'm a Reliance India Limited company. I issued a prospectus. Now in the prospectus, I'm saying that I will utilize this 10,000 crore rupees which I'm raising for the particular purpose of opening the 20 factories in the backward areas of Indian states. But later on, out of total 100% of 10,000 crores which I have raised, out of that only 50% I have utilized for that purpose. Remaining 50% of that money I utilized it for the purpose for which it was not raised. Say for example, I paid my personal obligations. I paid some of the short terms of the company. I paid some of the long term loans of the company. Short term loans and long term loans I have paid. But what was the actual purpose for raising the money? The actual purpose for raising the money was what? To open the various factories at the backward states. Am I correct or not? I utilized 50% of that money, but what about the remaining 50%? What about the remaining 50%? Is the remaining 50% utilized also for the same purpose? Answer is no. So why the money is not utilized for the purpose for which it was raised? That is a major concern which we have to look into in this particular topic. And if there is a deviation, if there is a variation in the purpose of using of such issue proceeds, that we have to report as per LODR regulations, and on that auditor shall also report whether that statement of deviation and statement of variation has been given by the company or not. Clear everyone? So let us understand what they are actually trying to tell you in the particular topic. I hope you already got an idea. So basically the idea is the money what you are raising via IPO, FPO, right issue or private placement of shares, make sure that you are utilizing that money for the purpose for which it is raised. If you are utilizing for the purpose other than for which it is raised, then you have to give that statement of deviation and variation, and that's what the auditor has to check. So shall we understand? Yes. So let us understand what the lawmaker is trying to tell you here. The listed entity, what is the provision says? The listed entity, as we all know that LOD are applicable to whom? Only the listed entities. The listed entities shall submit to the stock exchange the following statements on quarterly basis. On which basis? Quarterly basis for the public issue, the right issues and preferential issues, etc. If you have gone for any public issue, if you have gone for any right issue, or if you have gone for any kind of preferential issue, in that case on quarterly basis you have to give one statement of variation and deviation to that particular stock exchange. Are you getting the point or not? Following statement. What are the statement? Indicating the deviations, if any, the use of proceeds from the object stated in the offer document or the explanatory statement to the notice for the general meeting. Now, what do you mean by that? In that report, what should be written? Did you utilize the money for any purpose other than for which it was written in the letter offer or offer letter or not? In the offer document, sir, what do you mean by offer document? In the prospectus you said that you are going to use this money for one purpose, but actually you are utilizing the money for some another purpose. Is there any deviation in the use of such money of the issue proceeds or not? That is what. So indicating what? Deviations means what? The other purpose, if any, the use of proceeds from the object stated in the offer document, right? So you have to indicate the deviations if you have used the proceeds for any other purpose. Second thing, indicating the category wise variation. Now first of all is the overall variation you have to indicate. Suppose out of 10,000 crore rupees what you have raised, 2,000 crore rupees you have utilized for purpose other than for which it is raised. 2,000 crore is a total figure. In that 2,000 crore, category wise also you have to mention where the variations and deviations have come. So indicating category wise, what is the capital expenditure, what is the sales, what is the marketing, and what is the capital, working capital, etc. between the projected utilization of the funds made by it in its offer document or explanatory statement to the notice for the general meeting as applicable and the actual utilization of the funds. So the statement shall be continued to be given till such time the issue proceeds have been fully utilized or the purpose for which these proceeds was raised has been achieved. They are saying that don't stop giving these statements. The statements will keep on being given on quarterly basis to the stock exchange till the time the purpose for which it was raised has been issued or the total money has been utilized. Clear everyone? So basically in this particular topic what we are understanding is, now listen to this point. If the listed company has raised, if the listed company has raised money via any IPO or FPO or preferential issue. then concern is whether that money is being utilized for the purpose so mentioned in offer document or not. That is the major concern, right or not? Whether that money which is being utilized for the money is being utilized for the purpose so mentioned in the offer document or not. In the offer document, you are telling one purpose and you are actually utilizing the money for another purpose. Are you getting the point? In this case, what you have to do is, so I'll write it on the other side. In this case, what will happen? So this is point number 8, right? So this is relating to regulation number 8. Regulation number 8. So basically in the regulation number 8, what you have to do as a listed entity on quarterly basis, on which basis? Quarterly basis, must send the statement of deviation or variation in utilization of funds. In utilization of issue proceeds, you can write. Are you getting the point? So point number 1, on quarterly basis must send the statement of deviation or variation in utilization of the funds. To whom? To whom we have to send it? We have to send it to stock exchange. To whom we have to send? We have to send it to stock exchange. On which basis? Sir, on quarterly basis. Correct, everyone? Yes. Now, what to be sent? Two statements to be sent, indicating the deviation in utilization of funds. Means how much deviation is there in the utilization of funds. So it means overall deviation we are sending in one statement, and we have to send one more statement. What is the more statement? Indicating category wise deviation or variation in utilization of funds. So basically, if the difference between the budgeted purpose and the actual purpose for which you have utilized it is there, so you have to give the overall indication how much total money has been deviated, and you also have to give the indication of category wise deviation. Are you getting the point? And till when you have to keep on sending in. So listed entity shall keep on filing such a statement with stock exchange on which basis? Or quarterly basis, till the money is fully utilized, or the purpose is achieved. Are you getting the point? Either to the purpose of that money raised must have been achieved, or the money should have been fully utilized. Till that time, that listed entity has to keep on submitting this statement on quarterly deviation of the utilization of the funds via right issue, via public issue, or via preferential issue to the stock exchange. Am I correct or not? So that brings an end to the problem relating to this concept. So what is the concept we are done with? Statement of deviation or variation. So point number 1, applicable on whom? Listed entities. On which basis? Quarterly basis. Submitted to whom? The stock exchange. What? Category wise the deviation in the utilization of the funds, and overall deviation in the utilization of the fund. Till when? Till the time either the purpose is served or the money is being utilized. Clear, everyone? It is should be continued to be given. Next point. So what is the next point? Next point is a very important point, and so many times in the examination has been asked for the 4-mark question. So what is the next thing? If you remember, it is one of the mandatory review by the audit committee. So what is the next topic basically? So the next topic is relating to management discussion and analysis report. So before going inside the topic only, let me give you some insight of this topic. Are you getting the point? Now, what do you mean by management discussion and analysis report? Management discussion and analysis report is basically a report which is prepared by the management, and it includes the various discussions and various analysis done by the management. So that we can see it from the name itself also. It is known as management discussion and analysis report. But what do you mean by basically this? Basically, in this report, they will be talking about their internal control system. In this report, they'll be talking about their risks and returns. In this report, they will be talking about their segment performance. In this report, they will be talking about their operational performance. In this report, they will be talking about there are so many ratio analysis, so many accounting ratios. What is our GP ratio? What is our NP ratio? What is our debt turnover ratio? Stock turnover ratio? Debt by equity ratio? So many areas of the management are going to be covered in this report. It is also going to tell us about what are the various developments are happening in the industry, and whether this listed entity is also doing some developments or not. It is also going to have a discussion on its risks. It is also going to have a discussion on its outlook. So basically, this is a mix of, if you remember section number 134, we have talked about the board report. So like in the board report, we tell everything about the highlights of the company, KMPs, how many have been added, how many have been removed, how many subsidiaries have been added, removed, each and every detailed information about the company throughout the financial year. Likewise, same kind of information you have to give in management discussion and analysis. So basically, in this report, the management should include the various discussions on their outlook, risk and concerns, developments, what is happening in the industry, segment-wise performance, and what do you say about their human resource, about their internal control system, about the various ratio analysis, and about the various significant accounting ratio. This is what the meaning of this particular management discussion and analysis report. And yes, it is applicable on which entities? It is applicable on listed entities. Clear, everyone? So let us understand. As a part of director's report, that is what I told you. That is just now I told you, as a part of director's report. Do you remember director's report, board report, section number 134? As a part of director's report, or as an addition thereto, a management discussion and analysis report should form a part of the annual report to the shareholders. So like board report is also, we basically prepare it for the shareholders, for the users of financial statement. In addition to board report, this particular management discussion and analysis report is also going to be prepared by the organization. Which organization? Listed organization. It is also going to be forwarded to whom? The shareholders of the company. This management discussion analysis report should include the discussions on the following matters within the limits set by the company's competitive position. So basically, how the company is behaving in its industry when it compares to its competitors. Let's take an example. Airtel is preparing this report. Let's take an example. Airtel company is preparing this report. Now, so quickly, just try to understand who are the competitors of the Airtel in the market. Jio is there in the market. Vodafone Idea is there in the market. BSNL. So, how Airtel is performing in the telecom industry in comparison with its competitors? That is basically we are going to enter into this report. See, what is the performance of the Airtel company in the telecom industry when it comes to its competitors? Basically, so what is the industry structure going on, and what are the developments going on in the industry? What are the opportunities? What are the threats? Basically, it is nothing but strategic management report. You can say that it is also known as strategic management report. What kind of opportunities are there? What kind of threats are there? What are the industry structure going on? What are the developments going on? What are the segment wise or product wise performance of the company? What is the total outlook of the company? What are the risks and concerns which are surrounding the company? What is their internal control system and its adequacy, whether the internal control system is sufficient and appropriate, commensurating with the nature and size of the entity or not. Discussion on financial performance with respect to operational performance, whether the company's financial performance and operational performance, they are going to discuss on that, are they going well or not. Next, Material developments in the human resources and industrial relations fronts, including number of people may employed. How many new people have joined your company? What is your labor turnover ratio? Are you getting the point? How your human resources reacting? Are they motivated or not? What are the industrial relationships in front you have carried out with the industry? So basically, you are talking about, the surroundings. You're talking about your opportunities. You're talking about your threats. You're talking about your outlook. You're talking about your developments, industry structure. You're talking about your segment wise performance. You're talking about your financial performance. You're talking about your operational performance. You're talking about your human resource. You're talking about your internal control system. So each and every overview of the company in relation to its position in its industry in comparison with its competitors, you are basically giving that. Right or not? And I already told you so many significant accounting ratios details also you have to give. Are you getting the point? Now, what are those accounting ratios? Details of significant changes, that is 25% or more as compared to the immediately previous financial year. So there are some 7 to 8 ratios you have to calculate. How many? 7 to 8 ratios you have to calculate. You have to compare the ratios of the current year with the immediately preceding year. If the change between the preceding year and the current year is 25% or more, either upside or downside, that is required to be disclosed in the management discussion and analysis. So, sir, what amount of change we have to discuss? 25% on the upper side or 25% on the downside. Current year ratios are going to be compared with the previous year ratios. So, if there is any change, that is going to be discussed in this particular topic called management discussion and analysis report. How much change? 25% or more. Now, see. Changes of 25% or more as compared to the immediately previous year in the key financial ratios, along with detailed explanation thereof, for including what ratios you have to take care of: debtor turnover ratio, inventory turnover ratio, interest coverage ratio, current ratio, debt equity ratio, operating profit margin ratio, net profit margin ratio, or sector specific equivalent ratios as applicable. So if I have to tell you, basically we are talking here about solvency ratios, activity ratios, profitability ratios, and liquidity ratios. You all know in the intermediate in the financial management, we have discussed about all these ratios. In the solvency, what they are talking about? Debt by equity ratio. In the profitability, what they are talking about? GP and NP ratio. In the activity, what they are talking about? Debtors turnover ratio as well as the inventory turnover ratio. Are you getting the point? In the liquidity, what they're talking about? Current ratio. So basically 7 to 8 ratios you have to calculate of the current year, and you have to calculate the same ratios of the previous year. Do the comparison between the two. If there is a change of 25% or more either on the upper side or the downside, that is also required to be included in the management discussion and analysis. So what are the ratios again? Let's see. Debtor turnover, inventory turnover, they both are activity ratios. Interest coverage ratio, activity ratio. Current ratio, liquidity ratio. Debt equity ratio, solvency ratio. Operating profitability, net profit, operating or sector wise equivalent ratio. Details of any change in return on net worth as compared to the immediately previous financial year, along with the detailed explanation. If your return on net worth of the current year has been changed from the return on net worth of the previous year, if there is any deviation, if there is any change, that change is also required to be mentioned here in this report, along with the explanation why such change has come. Clear everyone? Yes sir, clear everyone. The above information presented by the management is likely to include non-financial information which may be outside the auditor's area of expertise. We all know that the auditor is basically concerned about what? Sir, why suddenly material reading? That also might be there in your answer. I already told you these 3 chapters are professional ethics. Are you getting the professional ethics, audit committee, and corporate governance? And there are some other few chapters which definitely we have to read it from the material. Otherwise, we may miss out even a single point. We miss out even as for the single point, we'll miss out. In that case, we will be bearing the consequences in the examination. So remember one thing: professional ethics and the audit committee and corporate governance, these are the must do chapters which you have to do along with the material reading only, and along with that, audit of banks, insurance, and NBFC. These are the major 4-5 chapters for which the material is required to be opened. Otherwise, you will not be able to understand the each and every 100% provision given in the curriculum. Clear, everyone? Yes, sir. Clear, everyone? Yes. So we all know that auditor is basically concerned with financial information, but there are some non-financial informations also which are outside his scope. That's what they're saying. In such situation, the auditor may keep in mind in his mind SA 315. So what is SA 315? Identifying the risk and assessment of the risk. Are you getting the point? Looking at the management discussion and analysis report, he should keep it in mind the SA 315 relating to identifying and assessing the risk of material misstatement to understanding the entity and its environment, and the fact that he is only required to review the compliance with disclosure requirements, not to verify the particular facts as disclosed by the management. SA 720 also relevant now. Why SA 720? SA 720 talks about other information, and all the information what we have talked about above are nothing but the other relevant information. So 315 he has to keep it in mind to understand the ROMM, risk of material misstatement, and 720 has to keep it in mind because other information is there. So I hope all of you understood basically. So let me make you write the class notes so that you can all understand. So sir, management discussion and analysis report. Management discussion and analysis report is what basically? It is a part of board report or in addition to board report. Sir, why do you give the notes after the reading of the topic? I already gave you an idea. Okay, sir, until and unless you will not start writing the auditing subject with your own bare hands, the subject will not go inside your head. Sir, have you ever seen me a single class without writing anything? No, I will write more than what is written in the provision sometimes. And you already have come across this experience when we did the company audit of CFS and other chapters when we have done. So part of board report or in addition to board report. Sir, to whom it is given? It is addressed to whom? Sir, it is addressed to shareholders. It is addressed to whom? Shareholders. So what does it include? Sir, it includes so many things. Sir, it includes the outlook. Whatever the things you can remember, just try to remember 5-6 points. It includes the internal control system and its adequacy. Sir, it also talks about its human resource development. Sir, it also talks about its opportunities and threats. Sir, it also talks about its financial performance and operational performance. Sir, it also talks about its segment-wise performance. Yes, sir, it also talks about what? The industrial development. It also talks about its industrial development. Sir, it also talks about its risks and concerns. And sir, it also talks about the various significant accounting ratios in comparison with previous years. Previous year. If the change is 25% or more, either upward or downward. Now, what are those accounting ratios? Now we have to make the list of those accounting ratios. So what are those accounting ratios? The debtor turnover ratio, the stock turnover ratio, the interest coverage ratio, then sir current ratio, then sir GP ratio, then sir NP ratio, and then we have debt by equity ratio or any segment wise ratio. So this is what this report talks about. So this report also talks about what? Sir, it also talks about return on net worth in comparison with last year. Right or not? And what is the auditor's duty, sir, in this case? What is the auditor's duty in this case? auditor's duty is to keep into consideration SA 315 and SA 720. Sir, SA 315 to identify the risk of material misstatements, and 720 because it is other information. As simple as that. That much you have to write in the examination, and easy 5 marks in your pocket. The biggest way, the best way of doing the theory subject like auditing is nothing but what? Break it into the parts. Try to understand each and everything. Break it into the bullet points and insert it in your head. Revise it 1 or 2 times, automatically the whole chapter will go inside. Clear everyone? Yes sir. It will go inside. Now you can see that the 1.5 page of material we have easily written in just 5 minutes, right? And on that is what the beauty of doing the or preparing the notes on your own. Next point, sir. So what is the next topic? Information to shareholder. Sir, regulation number 31. Sir, what do you mean by information relating to shareholder? Let me give you one idea about that. What kind of information we have to give it to the shareholder. Now try to understand what do you mean by information to the shareholder. Regulation number 36. Information to shareholders says that if you are a listed entity, if you are a which entity? Listed entity, and you have appointed your directors, and if you have reappointed your directors, or if you have done any kind of removal of your directors, if you are doing anything relating to your directors, appointment, reappointment, all those things, it is the listed entity's responsibility to give the required information to its shareholders about their directors. What is the name of the directors? In how many companies is already holding a directorship? What is the occupation of the director? What is the experience of that director? What is the qualification of that director? So each and every inch of information relating to the directors appointed by the listed entities is required to be given in a proper information manner to the shareholder. So it is applicable on whom? It is applicable on listed entities. So what is this all about? It is all about giving the information relating to directors to whom? Shareholders. So what kind of information? Their name, occupation, experience, relationship with the company, and in which companies he's already a director, all that past experience, each and everything about the director information we have to give it to whom? Shareholders. So just that you have to remember in how many companies he's a director, in how many companies committee he's a director, in how many companies committees he's a chairman. Each and every information about your director has to be in the hands of whom? In the hands of shareholders. Correct everyone? So let us understand what basically this LODR regulation is talking about. So in the case of appointment of new director or a reappointment of a director, I already told you, in case you are appointing a new director or in case you are reappointing the existing director, the shareholder must be provided with the following information. Sir, what? The brief resume of the director. So what do you mean by resume? Nothing but the curriculum vitae. Are you getting the point? The brief profile of that director, that like when we go for a job interview, do we give our resume for the interview or not? In the same way, the same resume for that director is also required to be given to whom? To these particular shareholders. The brief resume of the director. Nature of his expertise in the specific functional areas. What kind of expertise that director is holding in the particular areas. Disclosure of relationships between the director inter se, whether the coming director and the already existing directors are having any kind of relationship with each other or not. Inter se relationship between the directors. Names of those listed entities in which person also holds the directorship and the membership of the committees of the board. Are you getting the point? So I already told you in which listed entities you are a director and in which listed entities you are a membership of the committees. Are you getting it? That details also is required to be given to the shareholders. Next, sir, shareholding of the non-executive director, that we have already understood when we talked about the NED. Before appointing the non-executive directors, it is a responsibility of the non-executive director to disclose his shareholding in the company in which is proposed to be appointed as a non-executive director. Correct everyone? Next point, the notice being sent to the shareholders for an annual general meeting where the statutory auditor laws are proposed to be appointed or reappointed shall include the following disclosures as a part of explanatory statement to the notice. Proposed fees payable to the statutory auditors along with the terms of appointment in case of new auditor and any material change in the fee payable to such auditor from that paid to the outgoing auditor along with the rationale for such change. They are also saying that now about the directors information is already being discussed here. About the directors information is already being discussed in the first 5 points. Now we have to give the information to the shareholders about our auditor also. Sir, who has to give that information? Listed company must give the information about its auditor's appointment and auditor's reappointment also to the shareholders. So point number 2, what we are basically understanding is in the regulation number 36, LODR is saying that if you are a listed entity, give the two types of information to the shareholders. One information is relating to their director and another information is relating to the company's auditor. Who is a director? What is his brief resume? What is his area of specialization? What is his relationship with the other directors? Inter se, in which other listed company he is a director and a member of the board or committees and all. Am I correct or not? And what is the shareholding of the non-executive director? Then we also have to give, when we are sending the notice of AGM to the shareholders, in that notice of the shareholders, in that notice to the shareholders, we have to mention about our statutory auditors who are going to be or proposed to be appointed or proposed to be reappointed, about their remuneration, about their appointment. Are you getting the point? And if the outgoing auditor was drawing some remuneration and incoming auditor is having a new remuneration, if there is a change in remuneration of the outgoing auditor and incoming auditor, then why there is a change and what is the reason behind that change and whether that change is rationally being approved or not. That information also we have to give it to the directors. So sir, what is the information? These five information, sorry, to the shareholders. These five information about the directors, we have to give it to whom? Shareholders. And then we have to give the information about our auditor also to whom? Shareholder. So I'll make you write in a proper segregated way. So let us understand what information of our auditor we are basically giving to the shareholders. Notice being sent to the shareholders for an annual general meeting where the statutory auditor is or proposed to be appointed or reappointed shall include the following disclosures as a part of explanatory statement to the notice. Proposed fee payable to the statutory auditor along with the terms of appointment in case of new auditor. And in case of new auditor, any material change in the fees payable to such auditor from that paid to the outgoing auditor along with the rationale for such change. Basis of recommendation for the appointment including the details in relation to and credentials of the statutory auditor proposed to be appointed. Now on what basis this particular auditor is proposed to be appointed, that basis also we have to send. Who recommends the appointment of auditor? Audit committee's basis of recommendation, that information also we have to attach it here. And what is the auditor's duty in relation to this? Auditor should ascertain from the communication sent and whether in case of appointment of new director or reappointment of a director and the shareholder have been provided with the information stipulated above or not. Why auditor is not talking about himself? Because he himself is a statutory auditor. He does not have to see it any information relating to himself. So he is only going to check whether the above informations relating to directors have been sent to whom? Shareholders or not. Clear everyone? Yes. So let us understand what basically we are doing here. So the topic name is known as, what is the name of the topic, sir? The topic name is known as information to shareholders. I hope all of you are understanding. If you are understanding, do refer the classes. Please, please, please. It's my humble request. Do refer the classes to your friends if you really think that, yes, I am giving you the worth of this particular subject matter. So information to the shareholders. Sir, what are the informations to the shareholders to be given? Sir, two informations to the shareholders to be given. One is relating to director and one is relating to audit. Sir, what kind of director? If the new director is being appointed or if the existing director is getting what? Reappointed. Correct everyone? So what informations we have to give? So we have to talk about the brief resume, area of expertise, relationship inter se, in which other listed companies he's a director or he's a, what is a board member, or you can say a member of committees. Next one, shareholding of non-executive director. right? These are the all 5 informations relating to the new director which is going to be appointed or existing director who is going to be reappointed. That information we need to give it to whom? Shareholders. So regarding the auditor, in the notice of AGM, statutory auditor getting appointed or getting reappointed. If the statutory auditor is getting newly appointed or the existing statutory auditor is getting reappointed, that information has to be given. So what is the basic, what is the exact information we have to give? What is the remuneration? What is the remuneration payable to statutory auditor? And if the remuneration to new auditor is different from outgoing auditor, what is the difference? Is that difference is rational or not? Right? Next, basis of recommendations for appointment of statutory auditor. So these are the various informations we have to give it to the shareholders. Some informations are relating to whom? Directors, and some informations are relating to auditor. Now what is the auditor's role? Everyone, what is the auditor's role? The auditor's role is very simple. Auditors has to see that as per the information sent, whether correct information about directors have been given to shareholders or not. That is what the auditor's duty in this particular case. So with that, we are done with the 3 cases. So what are the 3 cases today we have covered? So today we have covered the statement of deviation and variation of the issue proceeds. Then we have covered the management discussion and analysis report. And just now we have covered the third one, information to the shareholders. What is the point? Information to the shareholders. So regarding whose information? Directors information and auditors information. Now the next and the most important thing, one of the very most important thing, you will not say that it is the most important thing, one of the most important thing, if you remember, we have heard this word somewhere. So what is this word? Stakeholders relationship committee. Most of the students, confuse it with the shareholders relationship committee. No, it is not shareholders relationship committee. What is the name of the topic? Stakeholders relationship committee. Stakeholder is a broader concept when it comes to the shareholder. Shareholder is just a part of the word called stakeholder. Correct? It is a part of the word called what? Stakeholder. Sir, what do you mean by stakeholder? Stakeholder means your lenders. Stakeholder means government to whom you pay taxes. Stakeholder means your debtors. Stakeholders means your creditors. Stakeholder means your customers, society. Everyone who is associated with the company is known as the person called stakeholder. So remember one thing, when we are talking about the stakeholders relationship committee, it is not only the relationship to be maintained with the shareholder, it is a relationship to be maintained with everyone. Are you getting the point or not? So what this basically is, the stakeholders relationship committee does is, it basically takes the complaints of the stakeholders in relation to that company. Let me give you one example. Suppose there is one shareholder. He did not get his dividend, even though the company has declared one time, two time, three time. It's been 3 times that he did not receive his dividend. Company is declaring, but he is not receiving. Now tell me, is he angry or not? Yes, sir, he is angry. So where is the place he should go and make a complaint? He will go and make a complaint to the stakeholders relationship committee. And he will tell to the stakeholders relationship committee, my transfer took so many days, I'm disappointed, I'm not getting my dividend on time, I'm disappointed, my transmission of shares has not taken place, my father has expired but his shares have not been transmitted to me, I'm disappointed. So any kind of disappointments, any kind of complaints, and any kind of grievances of the stakeholders in relation to the company, which company? Listed company, is going to be entertained by stakeholders relationship committee. And let me tell you one thing, it is a very and highly intellectual committee, and LODR regulation is very much strict when it comes to the stakeholders relationship committee. Clear everyone? So what is stakeholders relationship committee? This purpose of this the basic purpose behind the formation of this committee is to see that the stakeholders should not be unhappy with that listed entity. If they are unhappy with the listed entity, take their complaints, take their grievances and try to resolve it as soon as possible. So it is basically trying to maintain the relationship between the listed entity and its stakeholders. Clear everyone? So this is what the various things you have to understand. So debenture holders are there, shareholders are there, public deposit holders are there, any kind of security holders are there. Are you getting the point? They're having any problem with the company, so there should be someone in the listed entity to listen to their problems or not. That person who listens to their problem is known as which entity, which committee? Sir, stakeholders relationship committee. So sir, what is stakeholders relationship committee? Let us understand one by one and we'll see whether it requires any written notes or not. Now, point number one, everyone, try to understand what is point number one. The listed entity shall constitute a stakeholders relationship committee to specifically look into various aspects of interest of its shareholders, interest of its debenture holders, interest of its security holder. So basically they are not using the word only called shareholder. I already told you. They use the word called what? Stakeholder. So stakeholder includes shareholders, it includes debenture holders, it includes what? Security holders also. Now, who is going to be the chairperson of this company? The chairperson of this company shall be a non-executive director. It means we want someone who is little bit independent. We want a neutral person to chair this committee. That's why who is going to be the chairperson of this particular committee? The non-executive directors. Are you getting the point? Now, the stakeholders relationship committee shall meet at least once in a year. How many meetings are required? At least one meeting in a one financial year. Once in a year. At least 3 directors with at least one being an independent director shall be the members of this committee. It means one chairman is required and at least 3 directors are required. And among those 3 directors, one must be what? Independent director. And in case of listed entity having outstanding, what is SR equity share? Outstanding superior right equity shares. At least 2/3 of the stakeholders committee shall comprise of an independent director. You have seen everywhere that wherever the outstanding superior right equity shares are coming, everywhere they are more and more stressing on independent director. More and more stressing on their independent director. Do you remember in the audit committee also, 2/3 of the total committee size should be to independent director, but no, outstanding superior right shareholders are saying that we want all of them to be independent director. And there are some 1 or 2 places also where the outstanding superior right shareholders are saying that we want independent. Here also they are saying that normally the company without any equity shares having superior rights outstanding, for them out of 3 members at least one should be the independent director. It means they are saying that even if the one is independent director, indirectly 1/3 should be the independent director. But what does the superior right equity shareholder listed entities are doing? They are saying that out of the total remaining members of the stakeholders relationship committee, 2/3 should be the independent director. Correct? The committee shall consider and resolve the grievances. Grievances means complaints. Aspects of interest of shareholders, debenture holders, and other security holders. The chairperson of the stakeholders relationship committee shall be present at the annual general meeting also to answer the queries of the security holder. It means if you are a member of the stakeholders relationship committee, you also have to be present in what? AGM. Bhaiya, if any security holder wants to ask you any kind of answer, ki what has happened to my problem, what has happened to my complaint, then in that case you should be in a position to answer them. Clear everyone? Now what is basically the role of stakeholders relationship committee? It is an amendment resolving the grievances of the security holders of the listed entity, including complaints relating to transfer, transmission, non-receipt of annual report, non-receipt of declared dividends, issue of new duplicate share certificate, general meetings, etc. If you have not, if your transfer got delayed, transmission got delayed, share certificates have not been issued to you, dividend declared has not been received, you have not received the notice of AGM or any kind of general meeting, any kind of small chinna issues also, you have to give a complaint to the stakeholders relationship committee. That is a prime objective. Correct everyone? So sir, what is the basic audit procedure? The auditor should ascertain from the minutes of the books of the board meetings whether the board committee, namely a shareholders investor grievance committee, has been set up under the chairmanship of non-executive director. So basically what is required under the provision is basically required to be verified by the auditor. So we all know that who should chair this committee? So non-executive director. That is what the auditor has to check, right? Second thing, what has the auditor has to look into the redressal of shareholders and investors complaint like transfer of shares. So whether the company is basically trying to resolve the problems and complaints made by the stakeholders and security holders or not, that also auditor has to check. Then further, auditor should also ascertain from the minutes book of the stakeholder investor grievance committee meetings whether such committee is prima facie functioning or not, because we all know that this committee has to meet at least once in a year. So from the minutes only, the auditor will come to know that whether meeting was held or not, or whether this committee members have met or not. Then auditor should also verify from the records of the shareholder investor grievance committee as well as from the certificate obtained by the listed entity from the SEBI and stock exchange, if any, regards the investors grievances pending up to the date of certificate of compliance of condition of corporate governance. So whether all the complaints registered with this committee has been resolved or not, and if some are pending complaints, the auditor should review that how many complaints are pending and why they are pending and why they have not been resolved by the stakeholders investors grievance committee. Clear everyone? So yes sir, so what we understood, basically the major points we'll write and we'll move to the next topic. So basically what is that? The point is stakeholders relationship committee. Who, to whom it is applicable? To whom it is applicable? As we all know that, sir, you need not tell it is applicable to the listed entity. What is basically the purpose? The purpose is to resolve the complaints and grievances of its shareholders, debenture holders, and security holders. Now, next point, sir, who will become the chairperson of this committee? Sir, non-executive director. Right or not? Sir, how many members in this committee? Now, there's a problem. Listed entity without equity shares with superior rights. Listed entity with equity shares with superior rights. 3 members. 3 members. At least one should be independent director. At least one shall be independent director. And here at least 2/3 should be independent director. Clear everyone? Yes. And what kind of complaints? The complaints relating to transfer of shares, transmission of shares, share certificates, share warrants, dividend declarations, complaints relating to notices of AGM and general meeting. Right? Now, next point. Sir, what is the auditor's role? Auditor's role is to check whether NED is chairing or not. And one more thing. Sir, how many meetings? At least once in a year. At least once in a year. Sir, what is the auditor's role? Whether NED is chairing it or not. And from the minutes, it will come to know whether it is functioning or not. And from the minutes, it will come to know whether it is resolving doubts, resolving complaints or not. And auditor will also obtain the report from stock exchange where he'll come to know that how many pending complaints are there. Clear everyone? So that brings an end to the which committee, sir? Stakeholders Relationship Committee, and it is also known as Investors Relationship Committee. So with that, our another topic relating to that is over. I already told you the major topics are already covered in Part 1, Part 2, Part 3. Now the residual topics are going on, and in this part we are going to cover all the residual topics, don't worry. And in the last we will be only left with amendment. For the amendment I'll make a separate 1 hour video, because that is required to be published on the YouTube also for the other people also who are looking for the amendment in that particular topic. So that's why separate video will be created on that particular part. Clear everyone? So let us move with the next topic. Sir, what is the next topic? Transfer or transmission or transposition of securities. Now, most of the students get confused in this topic also. So, what do you mean by, sir, transfer? We know when the two voluntary parties are there, one is called transferor of the share and one is called transferee of the shares. When the transfer takes place between these two voluntary parties, that is called transfer of shares. Now, what do you mean by transmission? So, transmission of shares takes place on the three occasions: on the death of the member, on insolvency of the member, on the insanity. It will be transmitted to the legal representative, official assignee, and official receiver. Sir, what do you mean by transposition of security? What do you mean by transposition? Transposition is nothing but transfer, transmission, or transposition. It is written transfer or transmission or transposition of securities. Basically what happens, board of directors of the listed company delegate this power of transfer, transposition or transmission to one compliance officer. And it is a responsibility. It is a responsibility of the board of directors that they should see that whether that compliance officer or registrar to the issue to whom this responsibility for transfer, transmission and transposition of security has been given, is he actually doing that or not? Are you getting the point? So basically, board of directors generally delegate the power of transfer, transposition to a committee or to the compliance officer or to the registrar agent. But at the same point of time, they should make sure that whether that compliance officer is properly taking care of transfer, transmission and transposition of securities. Are you getting the point? And board of directors and the delegated authority shall attend to the formalities performing to the transfer at least once in fortnight. Sir, what do you mean by fortnight? Every 14 days. Every 14 days. It means every bi-weekly. It is a responsibility of the board of directors and the delegated authority to see that whether the transfer, transmission and transposition of securities is properly taking place or not. And how the auditor will come to know that whether it is being properly taking place or not? Auditor will check from their minutes. From the minutes, the auditor will come to know whether the transfer, transposition and transmission of securities to be carried out by the registrar agent or by the compliance officer is being carried out properly. That is what the chinna topic you have. Transfer or transmission or transposition of the security. So what is that? Now see, the board of directors of listed entity shall delegate the power of transfer of securities to a committee or to the compliance officer or to the registrar to an issue or the share transfer agent. So who are the four persons to whom the board of directors can delegate this authority? Board of directors can delegate this authority to a committee or to the registrar to an issue or to the share transfer agent or to a compliance officer. However, the board of directors or the delegated authority shall attend to the formalities pertaining to the transfer of securities at least once in a fortnight. At least bi-weekly, they have to ensure that formalities relating to transfer of securities have been properly taking place or not. It may be noted that the delegated authority shall report on transmission of securities to the board of directors in each meeting, provided that except in case of transmission or transposition of the securities, requests for effecting transfer of securities shall not be processed unless the securities are held in dematerialization form. First of all, tell me, what do you mean by demat form of securities? Demat is nothing but called holding the shares in an electronic form. For that, you need to have to open a demat account. So basically, what they are trying to tell you is very important part, provided that except in case of transmission or transposition of securities, provided that except in case of transmission or transmission of securities, request for effecting the transfer of securities shall not be processed unless the securities are held in dematerialized form with the depository. They are saying that They are saying that if it is a transmission of securities and if it is a transposition of securities, they can be done at any point of time. Either the shares are in demat form or the shares are not in the demat form. But in case the shares or securities are not in a demat form, then transmission of shares cannot take place. So transmission or transposition of the securities can take place irrespective of the fact whether they are in demat form or not in demat form. But transfer of shares can only takes place if the shares are in demat form. So provided that except in case of transmission and transmission of securities, request for affecting the transfer of securities shall not be processed unless the securities are held in a dematerialized form with the depositor. Clear, everyone? It means for the transposition and transmission of securities, dematerialization is important or not important? Not important. But for the transfer of securities, dematerialization of the security is important. Auditor should ascertain from the minutes book of the board meeting whether the listed entity has delegated the power of share to this person or not. And most importantly, the auditor should also verify from the records maintained to ascertain whether the delegated authority has attended to the share transfer formalities at least once in fortnight. Auditor may also verify whether any transfer requests are pending for more than fortnight and are not attended in terms with this regulation. That brings an end to this particular topic. Listen to this very carefully. Listen to this very carefully. So what is the point number one? The point number one says that if the board of directors of listed company wants, they can delegate this authority to the compliance officer. They can delegate this authority to the share transfer agent. They can delegate this authority to the committee, or they can delegate this authority. Who is that name of that person? Yeah, registrar to an issue. Registrar to an, correct? Now, in case they have given this authority to this person, but still the delegated authority and the board of directors every fortnight have to check the formalities of transfer of security. Have to check the formalities of transfer of securities. So what do you mean by fortnight? Fortnight, I already told you, it is nothing but known as the bi-weekly, every 14 days, right? And it is a responsibility of the delegated authority to report to board of directors whether the transfer of securities have taken place or not. That is the point number 1, 2 and 3. Sir, in the point number 3, they are saying that for the transmission and for the transposition, dematerialization of the security, not must. But for the transfer of securities, dematerialization of securities is must. And what is the auditor's role here? Everyone, what is the auditor's role here? Is to check whether the delegation is properly taken place or not. Is to check from the minutes whether they were checking every fortnight the transfer of securities or not. And he has also checked it from the minutes of board meeting whether any transfer of shares is pending. If so, why? Clear, everyone? So that brings an end to the transfer or transmission or transposition of what? Securities. Clear, everyone? So with that, our 12th regulation is also over. So now we are talking about what? Compliance certificate. This is the second most highly asked question in your examination, which most of the students fail to write. I don't know why. Why do they fail to write? Actually, what has happened before LODR regulations, it used to be known as, at my point of time when I cleared my CA, it used to be known as CEO CFO certification. Actually, you can call it as CEO or CFO certification. You can call it as CEO CFO certification. Or if you don't want to call it as CEO CFO certification, it can also be called as a compliance certificate. So basically, let me give you an idea. Sir, who is CEO? Sir, Chief Executive Officer. Sir, who is CFO? Sir, Chief Financial Officer. Actually, what these people are doing actually in the company? They are the white collar people, sir. They are the KMPs of the company. Sir, board of directors are taking care of day-to-day management. Board of directors are taking care of board report. These people are the strategic level people. The CEO, CFO are the strategic level people, white collar people. Nowhere in the Companies Act it was written that they will be held responsible for this, they will be held responsible for that. Companies Act 1956 was completely silent on these people, and they were escaping. Now what the Companies Act 2013 did and what the LODR regulations did, let's punish these white collar people if something wrong is happening. Let's make the preparation of financial statements completely their responsibility. Let them declare ki yes, it is true and fair. Let them sign on the financial statement. Do you remember section number 134 subsection 1, signatories of financial statement? Who signs? If the chairman is authorized by the board, chairman will sign along with CEO, along with CFO, along with CS. And if the chairman is not authorized, two directors, among whom one should be MD, along with CEO, CFO and CS. Why this suddenly CEO, CFO have been given so much importance in the Companies Act and LODR? Actually, it is not the importance. Actually, we want to make these people more responsible. Let's catch these white collar people if some fraud takes place. That is the reason the LODR regulation is saying that when the financial statements are getting prepared, it is the CEO and the CFO who have to certify in their personal position, who have to certify in their personal capacity ki yes, we have verified the financial statements, they are free from defects if any, and if there is any defect or if there is any adverse finding that is already being reported to the audit committee, we also declare that our internal control financial systems are true and fair and they are adequate and fully placed and fully installed. Basically, these are those two people who are going to sign on the financial statement and give this declaration. But in future, if something wrong will happen, these are the first two people who will be caught red-handed, and these are the first two people who will be hanged in case of any kind of fraud or any kind of misstatement takes place in future. This is what the basic idea behind the compliance certificate. So who are the two people and why it is known as certification? Certification means guarantee bhaiya. That's why chartered accountant, auditor is not signing along with them. They are those people who are going to sign this. So who are those two people? Sir, CEO and CFO. So what they are basically doing, I hope all of you got an idea. So let's catch these white collar people and let's make them more responsible towards what preparation of financial statement. If something happens wrong in the future, these are those people who are going to get caught. Clear everyone? Let us understand. Now see, Chief Executive Officer and Chief Financial Officer, Chief Executive Officer and Chief Financial Officer shall certify to the board that they have reviewed the financial statements and the cash flow statement for the year and to the best of their knowledge and belief. These statements do not contain any material untrue statement or omit any material fact or contain statement that might be misleading, and these statements together present a true and fair view and the listed entities affairs are in compliance with the existing accounting standards, applicable laws and regulations. So basically, CEO and CFO are giving declaration to board of directors ki bhaiya, we have reviewed the financial statements. We have reviewed the financial statements. And to the best of our knowledge, they do not contain any misleading information. They do not contain any untrue information and do not contain any kind of omission. of information which is material, and most importantly they are giving true and fair view. They are giving which view? They are giving true and fair view. And we also certify that these financial statements are as per the accounting standards, as per the laws and regulations, as per the schedule 3 requirement. So basically it is as per AFRF. It is as per our AFRF, applicable financial reporting framework. Sir, who is declaring? CEO and CFO is declaring. Sir, to whom they are declaring? They are declaring it to board. What they are doing? They are certifying in no material misstatement, no frauds and errors, and we believe that these financial statement preparation is without any misleading information and are as per the applicable financial reporting framework. In future, if something wrong will happen, these are the two people who are going to be caught. And what in the next paragraph it is being told? What in the next paragraph it is being told? Now tell me. What in the next paragraph it is being told? So in the next paragraph it is being told that there are, to the best of their knowledge and belief, no transaction entered into by the listing company during the year which are fraudulent, illegal, violative of listed entities code of conduct. They are also declaring that according to their knowledge and belief, no fraudulent transaction has been entered by the company which is against the code of conduct of the listed entity. They accept the responsibility for establishing and maintaining the internal control for the financial reporting, and they have been evaluated the effectiveness of the internal control system or the listed entity pertaining to the financial reporting, and they have disclosed to the auditors and to the audit committee deficiencies in the design and operation of internal controls, if any, of which they are aware, and steps have been taken proposed to rectify these deficiencies. So basically a very huge point on internal control system. CEO and CFO, in this point they are saying that, sir, in the above point what they are saying, sir, we believe that listed entity has not entered into any kind of fraudulent or illegal or violative kind of transaction which is against the code of conduct. And we also believe that internal control system is well installed and plays commensurating with the nature and size of the listed entity. And if there are any deficiencies which were found by us, that has already been reported to the auditor and audit committee respectively. Are you getting the point or not? And we have also started taking initiatives to rectify these internal control systems deficiencies. So who is declaring all these things? CEO and CFO is declaring all these things. Clear everyone? Yes sir, we are clear. And they have also indicated to the auditors and audit committee significant changes in the internal control system over the financial reporting during the year. Next one, significant changes in the accounting policies during the year, and that the same has been disclosed in the notes to accounts. The instances of significant fraud of which they have become aware, and involvement therein, if any, of the management or any employee having the significant role in the listed entities internal control system over financial reporting. These all are the things which you have to give here. So basically what we are trying to tell here, sir, we are trying to tell here one thing, let's create more responsibility for this. Who are these persons? The CEO and CFO. Now, let us understand what CEO and CFO is saying. This is known as CFO and CEO certification. So you can easily remember it as CCC. CEO CFO certification. So what is CEO CFO certification? To whom they are giving this certification? They are giving this certification to whom? They are giving this certification to board of directors. So what certification they are giving? They have reviewed the financial statements and they certify that two things, majorly two things. So point number one, what are they certifying? Quickly try to remember that. So they are certifying that if financial statements are not containing any misinformation, any omission, or any misleading information, and they're also saying that financial statements are depicting true and fair view and have been prepared as per applicable financial. So what do you mean by applicable financial reporting framework? So can you please throw some light on that? Yes, applicable financial reporting framework means schedule 3 requirements, accounting policies, accounting standards, and laws and regulations have been completely complied. And plus they are giving one more declaration that this listed, and they declare that this listed entity has not done any kind of illegal activity, has not done any kind of fraudulent activity, has not done any kind of violative activity which is against their code of conduct, right? And plus one more information, they are saying that this listed entity says that their internal control system is adequate, and if there are any deficiencies, that has already been told to auditor and the audit committee, and respective measures have been initiated to rectify the same. Clear everyone? Respective measures have been initiated to rectify the same. Clear everyone? Yes sir, that is also clear. And they are also giving some commitments. So what kind of commitments they are giving? Now they are also giving some commitments to whom? Audit committee plus auditor. So what kind of declarations they are giving to the audit committee? If there is any significant changes in internal control system, it has been disclosed. Point number 2, if there are significant changes in accounting policies, that also have been disclosed in notes to accounts. And point number 3, if there are any, if they become fraud of any if they become aware of any significant fraud, that has also been disclosed to auditor and audit committee. Clear everyone? So these are the various declarations and certifications which the CEO and CFO are giving. Either you can call it as a CEO CFO certification, or you can call it as a compliance certificate. Ya to CC or triple C. Are you getting the one? So what is the basic idea behind the LODR in introducing this regulation number, regulation in the part B of the schedule 2? The basically idea behind this regulation is we can ensure that these persons should be held responsible if something goes wrong. Anyways, they are doing nothing. Board of directors are getting the blame, employees are getting the blame. Let's blame these people now if there's something wrong in this the financial statement. That is why it is known as CCC, CEO CFO certification. Clear everyone? Yes. So what is the next topic? The next topic is relating to disclosures. The next topic is relating to disclosures. So we are on the edge of winding up this chapter. Sir, what do you mean by disclosures? That we are going to understand now, right? So now let's understand what is the next topic we are left with. Now the next topic is known as disclosures. So what is the name of the topic? Disclosures. So now see, LODR regulation on corporate governance says that if you are a listed entity, you have to make some following disclosures. So what are the following disclosures? There are basically three types of disclosures. Disclosure disclosure and transparency, disclosure relating to the related party transaction, and disclosures relating to accounting treatment. Let me give you one thing. What kind of financial situation the listed entity is having, what is the performance of the listed entity, who are the owners of the listed entity, and what is the governance of the listed entity. One particular information shall be prepared on that. So what information shall be prepared? Information on the financial performance, information on the ownership, information on the performance, information on the governance of the listed entity should be prepared and shall be disclosed in accordance with the prescribed standards of accounting, financial and non-financial disclosure. Second thing, every user of this listed entity must have an access to it. And minutes of the meeting shall be made explicitly recording the dissenting opinions. So what do you mean by dissenting opinions? Say for example, sometimes in the meeting, what will take place? Sometimes in the meeting, some shareholders are agreeing to the resolution. Some shareholders are disagreeing to the resolution. Say for example, company is saying that the company's performance is this. 60% of the shareholders are agreeing, and 40% of the shareholders are saying we are not agreeing to this performance, this ownership, and this financial performance or this financial situation of this company. We do not agree on that. Remember one thing, dissented shareholders are those shareholders who are not in the favor of that. Special report on the dissenting shareholders must also be prepared by the listed entity, and that is also required to be kept, and every user must have an access to it. So in the disclosure and transparency regulation number 4, what basically it is saying that every listed entity must disclose its financial position, its ownership, its performance, and its governance in the following manner. Point number 1, information shall be prepared and shall it be displayed as per the various standards. Every user must have an access to that information, and special minutes of the meetings, minutes of those meetings where the dissented shareholders have given the voting which is not in favor of that resolution, that is also required to be prepared. Then only it will be treated as a complete transparency. This is known as disclosure and transparency. Ki bhaiya, don't show us only those assented shareholders votes, show us the dissented shareholders votes also. Let's take an example of ordinary resolution. Ordinary resolution needs only more than 50% of the votes in favor. But suppose 49% of the people are not in favor, whether it's a very huge amount of dissenting shareholders or not. Yes, those meetings and the minutes of those meetings where the dissenting shareholders have given the votes against the resolution, that is required also to be displayed by the listed entity. It is required to be it is that information which is required to be prepared and disclosed as per the relevant standards, and every user must have an access of it. That's what do you mean by transparency. Then related party disclosure, that we have already discussed now, sir. Already omnibus approval, audit committee has to give who are your related party, all those things. Yes, that is being given, but I'm not talking about the specific disclosure. In this specific disclosure, they are saying that within the 15 days from the end of each quarter, that listed company must prepare a report on its related party transactions and is required to be submitted with that stock exchange. So what they are saying that every listed company shall submit a quarterly compliance report on its corporate governance in the format as specified by the board from time to time to the recognized stock exchange within 15 days from the end of each quarter. Details of all the material transactions what the company has entered with its related parties, that is required to be disclosed in that report with the signature of a compliance officer or the CEO of that listed company. And company shall also ensure that how they are dealing with this related party transactions, and that particular process of dealing with the related party transactions is also required to be published on the website of the company. Clear, everybody? Yes, sir. And one more important thing, disclosure of accounting treatment. While preparation of financial statements, if the listed company has adopted different accounting standards than those accounting standards which are generally adopted. So suppose listed entity has adopted different accounting treatment or different accounting standards. Are you getting the point? See, it's a very simple example. Suppose a company, while preparing the financial statement, a different treatment from that what is written in the accounting standard has been adopted. They have to give the justification in which manner this particular treatment what they have adopted, which is different from the accounting standard treatment, is better and more apt. It's a very simple thing. Accounting standard INDAS is saying some accounting treatment. Say for example, accounting standard 1616 talks about the plant, property and equipment. It is saying one treatment, but company is doing the different treatment which is not recommended by the accounting standard. Some different treatment company is adopting. Why the company has adopted that different accounting treatment other than what is recommended by the standard? If you are able to justify, please justify us. Who is saying that? Recognized stock exchange is saying that please give us the compliance report and tell us why you have adopted a different accounting treatment. So three disclosures basically are required to be given. Sir, disclosure number 1 relating to transparency. Sir, disclosure number 2 relating to related party transaction. Sir, disclosure number 3 relating to accounting treatment. So right, so let us read what are the three types of disclosures. The listed entity shall ensure that timely and accurate disclosure on all the material matters, including the financial situation, including the performance, ownership and governance, shall be given in the prescribed manner. Information shall be prepared and disclosed in accordance with the prescribed standards of accounting, financial and non-financial disclosure. Channels for dissenting information should provide for equal, timely, and cost-efficient access to relevant information by the users. That I already told you. The information on the financial information on the financial situation, information on the performance, information on the ownership, and information on the governance shall be prepared and shall be published as per the standards of the financial and non-financial disclosures, and every user must have an access of it. And especially I told you what minutes of those meetings where the dissenting shareholders opinions are there. Now see, what is the third point? Minutes of meetings shall be maintained explicitly recording the dissenting opinions. What do you mean by dissenting opinions? Which are not in favor. Which are not in favor. Are you getting the point? Which are not in favor, those are known as dissenting opinion. Then only you can say that yes, it is a complete disclosure and transparency. Clear everyone? Yes. Then I told you related party disclosure is also required. So every listed company shall submit a quarterly compliance report on the corporate governance in the format as specified by the board from time to time. To whom? To the recognized stock exchange within 15 days from the closure of the quarter. So what kind of details? Details of all those material transactions which have been entered with the related party, and this particular report and this information must be signed by the compliance officer and the chief executive officer of the listed entity. या तो compliance officer sign करेगा या chief executive officer sign करेगा. And company should also disclose its policy on dealing with the related party transaction on its website, and a web link thereto shall be provided in the annual report. Clear everyone? And last but not the least, if while preparing the financial statements, if the company has adopted a different accounting treatment which is suggested by the standards, then the company has to justify in which way this is better than accounting standard treatment. If they are able to justify, adopt it. But if you are unable to justify, come back to the same accounting treatment which is suggested by the accounting standard. So see, while in the preparation of the financial statement, a treatment different from that prescribed in the accounting standards have been followed, the fact shall be disclosed in the financial statement together with the management's explanation to why it believes that such alternative treatment is more representative of true and fair view of the underlying business transaction. If why you have adopted different, if you are able to justify why different is more elaborate or why different accounting treatment is more justified, then in that case it's okay. But if you are unable to, then in that case come back to the same accounting. So these are the various three disclosures. So let's write it one by one. So three disclosures. So listed entity has three responsibilities. So what are the three responsibilities? The information on financial position, information on its performance, ownership, and governance shall be prepared and published as per standards. Every user must have access to it on timely, efficiently, and cost basis, and minutes of meetings of dissenting shareholders must also be disclosed, so that everyone will in a transparent manner come to know how many are assenting and how many are dissenting. That is the one thing. Then every listed entity on quarterly basis shall prepare a compliance report as per board directions to be submitted to stock exchange within 15 days from end of each quarter. Correct? So this is what the chain. So listed company shall prepare on quarterly basis, prepare the compliance report as per the board directions to be submitted to stock exchange within 15 days from the end of each quarter. So what should be written? The significant related party transactions which is to be signed by either compliance officer or by CEO, and make sure that the related party transactions dealings are being published on the website, and the web link of that is provided in annual report. Clear, everyone? So that brings an end to this one also. And in this they are saying that if the listed entity is adopting different accounting treatment other than standard, other than recommended by standards, then in that case management must explain in which way it is better and true and fair. Correct? So this is what the another disclosure. So with that, our disclosure part is also over. Now we are left with the two important committees in this particular topic. So what are the two important committees we are left with? Do you remember just now we have completed one topic relating to committee, stakeholders relationship committee. Like that we have the two more committees, risk management committee, and after that you can find that there is one another committee called nomination and remuneration committee. So there are total three committees as per the LODR regulations we have to do. Stakeholders Relationship Committee, which you already know that must meet at least once in a year, must be headed by a non-executive director with the three members, with out of them one should be independent director, but if it's a superior right equity shares, then out of three members minimum 2/3 should be independent director, and they should take care of the grievances of the security holders, the shareholders and debenture holders, and auditor has to ensure that they are resolving the grievances. Simple. Now, what do you mean by risk management committee, guys? So, sir, basically, risk management committee, from the name itself only you can understand. What is basically the idea behind the risk management committee? The idea behind the risk management committee is how to monitor and how to review the risk management plan and whether they can mitigate those risks in the future or not. Let's take an example. What kind of control risk? You may get the accounting control risk, you may get the general control risk, you may get the IT risk, information technology risk. Is your cyber security very good or not, whether somebody can hack your website easily or not? So these kind of various risk management, risk mitigating efforts what every listed company has to take care of. So for that they have to constitute one committee, that is called risk management committee, the committee which is going to mitigate or manage their future risk in relation to networks, in relation to securities of controls, all those things, whether they are able to manage their risk properly or not. On that they have a particular committee to be talked upon. So sir, what do you mean by risk management committee? The board of directors shall constitute, the board of directors shall constitute a risk management committee. The risk management committee shall also meet at least once in a year. The majority of the members of the risk management committee shall consist of members of board of directors. However, in case of listed entity having outstanding superior right equity shares, at least 2/3 of the risk management committee members should be independent directors. Now, other than superior rights equity share outstanding listed entities, they should have majority of their risk management committee members should be what? Board members only. But as per the superior right equity outstanding shares, the majority need 2/3 of them should be the independent directors. The chairperson of the risk management committee shall be a member of board of directors, and a senior executive of the listed entity may be the members of the committee. It means the chairman of the risk management committee, sir, who is managing the risk? Board of directors. Who is taking care of the daily risk? Board manager. That is why majority of the members should also be what? Board of directors. That is why their chairman also should be one of the board of director, and the senior executives of the listed entity may be the members of this committee. The board of directors shall define the role, responsibility of the risk management committee and may delegate monitoring and reviewing of the risk management plan to the committee, and such functions it may deem fit shall be specifically cover the cyber security. That's what I told you, okay, how they are going to mitigate the various risk of IT. The provision of this regulation shall be applicable to the top 500 listed entities with effect from 129, determined on the basis of market capitalization at the end of immediate previous financial year. So basically, what is risk management committee? Sir, very simple. Very simple. Sir, who constitutes? Board of directors shall constitute. What? Risk management committee. Sir, who is going to be the chairperson? The one of the board of directors. Sir, who is going to be the other members? Sir, other members are among the board of directors. Right or not? Who is going to be the other members? Other members are also going to be the board of directors. Means what? Other members may majority among the board of directors. But if you're a listed entity with the superior rights on equity shares outstanding, then in that case 2 by 3rd should be the which directors? Independent directors. So how many minimum members, that is not being told. Sir, how many meetings? How many meetings? At least once in a year. So what is the purpose? To mitigate future risk and cyber security. Right or not? It is applicable to whom? Sir, it is applicable to the top 500 listed entities as per their market capitalization. Clear? So let us see one by one whether we covered out the point or not. So board of directors will constitute this committee. Risk management committee shall meet at least once in a year. Majority of the members are consist of members of the board of directors. However, in case of listed entities having outstanding superior rate, at least 2/3 of should be independent director. Chairperson should be one of the member of the board of directors, that we already know. And yes, what about the other members? Sorry, one point we forgot to write. Other members, senior executives of the company are going to be the other members. Right? Next point. Sir, board of directors shall constitute, define the role of responsible, delegate monitoring and review of the risk management plan to the committee and other cyber security related is applicable to the top 500 listed entities. That brings an end to the risk management committee, and now we are on the edge of completion of this chapter, which is known as next topic called nomination and remuneration committee, sir. So basically from the name itself only you can understand the meaning of the committee. So like we understood, what do you mean by shareholders grievance committee? Stakeholders relationship committee mein, they will take care of the grievances of the security holders. Risk management committee is basically taking care of its mitigation, its future risk and cyber security risks. And basically, what is the purpose of this nomination and remuneration committee? Sir, it's very simple to see. First, what is nomination? It means this committee is the one who is going to see the performance of every kind of person in the organization, and it will nominate them for promotion or denominate, or you can say that demote them from the promotion. Say for example, I am the director. I am performing very efficiently and performing very effectively. Now nomination and remuneration committee is always watching me. They are watching my performance. On the basis of my performance, what this committee will do, it will nominate me from director to senior director. Are you getting the point or not? Or it may nominate me from senior director to KMP. So nomination from one position to another position, that is the basic purpose from the name nomination. And what is another name? Nomination and what? Remuneration committee. So this is also the committee who is going to decide and recommend your remuneration to the directors and KMPs. Are you getting the point? How many should be the board of directors? What should be the size of the board of directors? What should be the structure of the management? Each and everything is going to be seen and directed by the nomination remuneration committee, which makes it highly important. And I think that LODR will not be doing justification if the independent directors are not going to be the part of this committee. So let us see what this committee provisions are there. Now, the board of directors constitute the nomination and remuneration committee, which shall comprise of at least 3 directors, and all of whom shall be non-executive directors, and at least half shall be independent. And in case of listed company having outstanding superior rights, 2/3 of the nomination and remuneration committee director shall be of independent director. Chairperson of the committee shall also be an independent director. So I already told you from the name itself, it is going to be a very highly important committee. So in that case, we have to ensure that in this committee, very independent kind of people are there. So point number 1, sir, साथ साथ में लिख लेंगे, who constitutes 5 board of directors, minimum members, sir, 3 members. Same stakeholder relationship committee, there are also minimum members, 3 members, among whom one should be independent director, and as per the superior right outstanding shares, 2/3 should be independent director. Here also minimum are 3 members, but all there the chairperson was non-executive director, but here all are non-executive directors. Sir, all are what? Non-executive directors, and among them majority shall be independent directors. Majority shall be which director? Independent director. But if it is a superior right equity shares outstanding listed entity, then in that case among the members, minimum 2/3 must be independent directors. And who is going to be the chairperson? The chairperson of this committee is also going to be the independent director only. Correct, everyone? Yes, sir. Correct. So let's understand what is the next point. Provided that the chairperson of the listed entity, whether executive or non-executive, may be appointed as a member of the nomination and remuneration committee, but shall not chair such committee. That they are simply saying that the chairperson of the entity means Ratan Tata, who is the chairperson of the Tata group of companies, cannot become the chairman of this committee, but yes, he can become one of the member of this committee. So chairperson of the entity is not allowed to chair this committee, but he is allowed to be the member of this committee, whether you are executive, non-executive director. The nomination and remuneration committee shall also meet at least once in a year. The quorum of meeting of this committee is 2 or 1/3, whichever is higher, including at least one independent director in the attendance. So basically, what are the other provisions we have learned so far? Sir, other provision what we have learned so far is, sir, chairman of entity. What he can be, what he can't be. The chairman of the entity can be member of nomination and remuneration committee, but he can't be what? Tell me what he can't be. He can't be the chairperson of this committee. Clear? So he can be the member of this committee, whether he is executive or non-executive director, but he can't be the chairperson of this committee. Second thing, how many meetings? Sir, at least once in a year. Sir, at least how many times in a year? Sir, at least once in a year. Right or not? Next point. Next point. So what is the quorum? So we all know what is the quorum provision. The 2 or 1/3, whichever is higher. But at least one must be independent director. Clear, everyone? So I hope you all are understanding these brief notes which I am making on the sidelines. Yes. Now let us understand what is the basic role. I told you now, from the name itself only you can understand the role. Nominating the people or denominating the people. It means it will be the committee which will decide your promotions, and it is the same committee which will decide your demotion also. So on the basis of your performance, experience and efficiency and effectiveness in the company, and having your past experience in the company, this committee will decide, are you eligible to be appointed from director to senior director, or from senior director to KMP, or you should be brought down from KMP to senior director and senior director to director. So that is what basically the work of this committee. So shall we understand? Sir, yes, we shall understand. What is the role of this committee, everyone? Now try to understand and then we'll write. Formulation for the criteria for determining the qualification, positive attributes and independence of directors, and recommend to the board of directors a policy relating to remuneration of directors, key managerial and other employees. So basically this point is relating to remuneration. So this committee will follow, or this committee will determine a policy and they will recommend it to the board of directors what should be the remuneration of directors, KMPs and employees of the company. And this is a committee which will determine the criteria for determining the qualification, positive attributes and independence of the director. Next point, formulation of criteria for evaluation of independent directors and the board of directors. It is a committee which will always keep an eye over the independent directors and the directors to understand whether they are maintaining their independence and whether they are maintaining their performance or not. And it is also devising a policy on board diversity. What do you mean by board diversity? In this board of directors, which director we want from which field? How diversified the board of directors should be? We need one from the finance field, one from the marketing field, one from the HR field, one from that field. So diversity of the board of director is also going to be decided by this committee. And it is also going to identify those persons who are qualified to become directors and who may be appointed in the senior manager in accordance to the criteria laid down, and recommend to the board that their appointment and removal. So either you are recommended for the promotion or you will be recommended for the appointment or removal, and whether to extend or continue the term of appointment of an independent director on the basis of the report of performance evaluation of independent directors. The chairperson of the Nomination and Remuneration Committee may be present at the annual general meeting to answer the shareholders' query. However, it would be set up to chairperson to decide who shall answer the queries. So I forgot to write that point in the Stakeholders Relationship Committee also. So yes, here also I forgot to write this point. So here also one point is the chairperson of Stakeholders Relationship Committee should also be a part of AGM to answer queries, and the same point is also applicable to whom? This same point is also applicable to this point. So let us understand what is the role. So role number 1, it will decide the criteria for appointment, right or not, and for independence of directors. Next, point number 2, it will decide the remuneration for directors, for KMPs, and for remuneration criteria for directors, KMPs, and employees, and it will recommend it to the board of directors. Third, it will always keep on watching the independence and performance of what? Independent directors and directors. Next one, this is a committee which will think of diversity of the board, if I'm not wrong. And this is the committee which will think of who shall be promoted, who shall be appointed, and who shall be removed. And this is the committee which will decide whether to extend the duration of independent director or not, according to the evaluation report. I hope every one of you understood or not. Yes, sir, we highly understood this topic. And most importantly, the chairman of this committee will sit into the AGM to answer queries, but the only difference is he will decide the personal or KMP on their behalf who is going to answer their query. Clear, everyone? So relating to the, now you can see that what is written basically. So that is the only point which makes it different from the Stakeholders Relationship Committee. The chairperson of the Nomination and Remuneration Committee may be present at the annual general meeting to answer the shareholders' queries. However, it would be up to the chairperson to decide who shall answer the queries. It is not necessary that the chairperson will be forced to say something. He will decide who will say these queries answers on his behalf, right? So that brings an end to the another topic also. And now we are on the last two topics. One is known as yes, amendment will be taken care of in the next topic. One is known as report on corporate governance. So that we already know. We all know that what kind of report on the corporate governance is required. Everyone, please quickly tell me on quarterly basis. A report on corporate governance is required to be submitted to the stock exchange within 15 days from the end of that quarter. That is what is being given. And this report must be signed by either the compliance officer or the chief executive officer. Are you getting the point? The auditor should also ascertain whether the board of directors have included in the annual report of the listed entity a separate section on the corporate governance or not, and any data on relation to the corporate governance should not be inconsistent with that in financial statements. Corporate governance report. So basically, corporate governance report talks about what? Corporate governance report includes the various sections. Whatever the regulations we have done above, all those things you have to write here. It includes one particular section relating to audit committee. It includes one particular section relating to composition of board. It includes one particular section relating to the vigil mechanism. It includes one particular section relating to the remuneration of directors. It includes one particular section relating to the committees. It includes one particular section relating to the material unlisted subsidiaries. So you can see that what this basically the report is going to include. It a brief report on the listed entities philosophy and code of conduct, board of directors, audit committee, nomination and remuneration committee, remuneration of directors, stakeholders grievance committee, general body meetings, at which place, at which location the meetings have taken place, what was the quorum at that point of time, how many votes have been casted, postal ballot system, each and every information relating to general meeting is also required to be disclosed. Means of communication, whether the company on quarterly basis is communicating the results or not, in which newspaper, at what point of time results were published, and the website, etc. General shareholder information, AGM date, time, venue, financial year, dividend payment, stock code, marketplace, low, what is the market price, low and high during the each month, what is the performance in comparison to the other indices on BSE or NSE, registrar, share transfer agent, distribution of shareholding, dematerialization, ADR, GDR, everything, and other disclosures. May disclosures on materially significant related party transaction that I already told you, which is in conflict with the interest of the company. Then details of non-compliance by listed entities, penalties if any have been imposed on the entity, and details of vigil mechanism. So basically what I'm trying to tell you, read the heading. The heading is corporate governance report. So corporate governance report is nothing but all the topics what we have done above. So if you know the heading of each and of every 15-16 topics we have done above, you just have to include it, and 2-3 extra points relating to AGM, relating to other general disclosures, relating to related party, relating to vigil mechanism, nomination remuneration committee, stakeholders grievance committee, audit committee, board of directors, remuneration. Each and every heading what we have done above is going to be included in this corporate governance report. So in this paragraph, what is being told? What do you mean by report on corporate governance? That we already know. As specified by board from time to time on quarterly basis, this report is required to be filed with the recognized stock exchange. Sir, within 15 days from the close of the quarter, a report shall be either signed by the compliance officer or chief executive officer, which we have already discussed. Am I right? Auditor should ascertain that whether the board of directors have included in the annual report a separate section on corporate governance or not, and any data in the report on corporate governance shall not be inconsistent with the information given in the financial statement. And what should be the corporate governance report shall include? Corporate governance report shall include the following: history, board of directors, audit committee, nomination remuneration committee, remuneration of directors, stakeholders grievance committee, general body meeting, means of communication. These are the 3 extra points. General body meetings mein what is the location, time, place of AGM, EGM, quorum, notice, resolution, board. Means of communication, are you giving the quarterly results, in which newspaper, where the website, where etc. has been published. General shareholder information means what? AGM time, date and place, what is the price move up and down, what is the price in NSE, BSE, all those indices prices you have to see whether the company has gone for any ADR, GDR or not. Other disclosures may related party transactions, non-compliance with the list, any kind of penalties which have been imposed, then you can also talk about this thing relating to this. Wait. Yeah, you can also talk about this thing relating to vigil mechanism, compliance with the mandatory requirements on non-med web link, where the policies for determining the material subsidiaries, each and every point what we have discussed in the last 4 lectures, their headings is required to be included in this topic. Clear everyone? So that is what is all about corporate governance. And what do you mean by auditor's certificate? So remember one thing, it is not always the chartered accountant in practice who is going to give a auditor certificate on corporate governance. Sometimes the practicing company secretaries can also be appointed to give the auditor certificate. So what is written in first paragraph is that only, as per schedule 5, a listed entity shall obtain a compliance certificate from either the auditors or from the practicing company secretaries showing the compliance of the conditions of corporate governance and shall annex it to the director's report. Now, under what circumstances adverse or qualified statement can be given by the auditor or company secretary? Remember one thing, auditor's certificate on compliance of corporate governance is neither an audit nor an opinion. It is just a statement. And what do you mean by adverse and qualified? When the auditor can give the negative statement. Under what circumstances the auditor will give the negative statement? Try to think logically. You are a auditor of a listed entity, and in what circumstances you will give the adverse comments and adverse statements? Obviously, when the company is not following its LODR regulations or corporate governance regulations properly. Suppose board of directors composition is not correct, independent directors composition is not correct, remuneration to the director is not being paid properly, composition of audit committee, nomination, remuneration committee, stakeholders committee, risk management committee is not proper. They are unable to identify what is your material, what is your immaterial unlisted subsidiary. You have not developed a policy on whistleblower policy. Write negative, write negative about all the 15-16 regulations we have learned so far in the last 4 lectures. If those negative things are happening in the listed entities, suppose they have not followed their code of conduct, suppose they have not given the proper information on directors and auditors to their shareholders, suppose the transfer or transmission or transposition of securities have not taken place, suppose management discussion and analysis report has not taken place. So all these are positive aspects or negative? Sir, all these are negative aspects. These are the various cases you have to write. If they will ask you one question, under what circumstances the auditor certificate can give the adverse or qualified statement. So for your convenience, I will read it for once. Depending upon the facts and circumstances, some situations may require an adverse or qualified statement or disclosure without necessarily making it a subject matter of qualification in the auditor certificate in respect of compliance of requirements of corporate governance. Example, number of non-executive directors are less than 50%. That is what I told you. Think negative of all those provisions and it will become your answer. Qualified and independent audit committee is not set up. Chairman of the audit committee is not an independent director. Audit committee does not meet 4 times in a year. The gap between the two meetings is more than 120 days. The powers in terms of Part C of the schedule 2 have not been vested by the board in the audit committee. That's what the gap between the board meeting is more than 120 days. Director is member in more than 10 committees and is a chairman in more than 5 committees. Remuneration is not been paid according to the quarterly results are neither put up on the website and nor any weblog has been given to the annual report. Am I correct or not? Then the powers of the share transfer is not delegated to the officer or committee or the registrar. So if anything what the auditor is expecting, a listed entity should follow, and if they are not followed, that will draw which comments? Adverse or qualified statement. So you just don't have to learn this. I will say you don't have to read this also. Think about the negative of everything what we have done in the audit committee and corporate governance, and that will become the answer of this particular question. I hope I justified your expectations in understanding this chapter. So that brings an end to this chapter that is known as audit committee and corporate governance. Very highly important chapter. Audit Committee and Corporate Governance, only what we are left with is that amendment, and that amendment will be told to you separately in one particular video, which is going to be the next video. And do tell to your friends that this particular amendment video is also going to be available on the YouTube, to make sure that everyone is making the best use of that. That is the biggest amendment you can ever see, and it will take minimum 1 hour to make you understand what this amendment is all about. So that is coming up to you in the very next video. I hope I met your expectations in this chapter. If you have any kind of suggestions, or if you have any kind of grievances, even I have a committee, and that committee is me myself only, so I'll be glad to resolve your things. So thank you so much for lending your patient ears. I'll again borrow it in the next chapter. Thank you so much. Bye bye.